coronavirus, and the incoming recession. Stay tuned to this week's episode of Prime Property TV. Promise you, it'll be worth it. Good day, Toronto. Welcome to another episode of Prime Property TV. So glad you could join me here today. And Coco, it's a very weird time right now, and we're in completely new territory with everything that's going on. So make sure you guys stay safe, avoid social gatherings, and help one another the Canadian way if possible. I've also seen a lot of fake news out there regarding lockdowns, so make sure you're tuning into the correct media sources such as the CDC, the WHO, and our Canadian government as to what's going on so that you can be safe. And of course, try not to hoard toilet paper. I don't understand what it's about. We're not hoarding any toilet paper. We have plenty. I don't think that's the first thing we'll think about getting if there is some kind of crisis. But oddly enough, we do need a lot of paper towel because this little guy is potty training right now. So we have a lot of accidents that we are cleaning up right now. So with us being in self-isolation, I thought I'd take some time to kind of give you guys the update on what I think is happening in the real estate market with the coronavirus and what I think the recession that is coming. You know what? It's definitely coming. So make sure you stay tuned to this week's episode of Prime Property TV. If you want more updates on the coronavirus and what's going to happen to the real estate market and my thoughts and opinions on all of it, give me a like and subscribe to the PPTO channel. So let me know so that I will continue making this throughout the weeks as it happens as I am home. Puppies seem to cheer a lot of people up. So in this time of crisis, here's a cute face. Here's a cute face. Look in the camera. No, you don't want to look in the camera? Look. Say woof, 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 baby. Okay, you can't tell people what's going on with the coronavirus, so I'm going to put you down. So at the time of filming, it's Wednesday, March 18th in the afternoon. I'm stating this because the information is changing so fast. It's super dynamic. So anything I'm talking about right now is information I have just read or looked upon since March 18th in the afternoon, okay? So back a while ago in February, I posed a question and made a video about, is Toronto real estate market recession proof? And you know what? We're really gonna find out if it is. So if you wanna check out more about that video, you can click on the little eye on the button up here to see kind of my thoughts then. Okay, so in this video, I'm gonna break it up into three parts. Number one being what I'm seeing on a day-to-day transaction. And what I mean by that is just kind of what my colleagues are doing, what's going on in the market, not physically seeing things because I'm self-isolating. Number two, I'm gonna be talking about what kind of effect the COVID-19 virus has on the real estate market. And number three, just kind of sprinkling some economic impacts of what is gonna happen because the economy affects real estate as well. But before I provide that, earlier today, the government announced basically an $87 billion, that's with a B, financial stimulus package, which is about 3% of GDP. And I would say is probably the first wave of financial aid to kind of keep the economic engine of Canada going. Included things such as 14 weeks of EI payment directly to Canadians. This is somewhere between $27 billion, as Trudeau said. It also includes emergency support benefits, wage subsidies, and much more. And if you want to kind of see what's going on, I'll put a link in the description below. There are articles about it. Another big one is they delayed taxes. So it's due on June in 2020, and the payment, if you owe any, is August 2020. Now, why I'm telling you all this is important is because I'm reading in between the lines right now, and it looks like the government's telling us they're going to expect this to go on for about 3 months, because if you look at 14 weeks of EI, that's almost 100 days, which is 3 months. And your taxes being pushed back to payment about August 30th, that's about 3-ish, maybe a little bit more months from when it originally is due. So that is why I'm thinking the Canadian government is preparing us for a 3-month kind of soft landing for the economy. Another good thing is 6 of our major banks out there are allowing for 6 months of deferred payment on your mortgages. I'll also put a link in the description below for the article. What the details are right now, I'm not too sure, but this is all a great start to kind of soften the blow to the economy that we're going to be experiencing so far, okay? First off, what I'm seeing in the Toronto real estate market is kind of weird, okay? Look, I've always been a big believer in the Toronto real estate market, but some things that are happening right now just don't make sense. Like, I get why people are doing it, but it just doesn't make any sense from my perspective. And it's very weird to see, okay? So my stance right now is I'm quite bearish and concerned about the real estate market in the short-term future until this pandemic is all sorted out. Because at the end of the day, I'm still bullish and confident in the long term of the real estate market, but currently everything that's happening is totally unpredictable. So right now I'm being super cautious, but when this all overs, I'm expecting some kind of increase in activity and maybe sales price. Right now, I'm seeing properties where they're holding offers and still getting 5+ offers, but instead of like physically going there, there's email saying they're going to do this electronically, which I guess is very good because they're practicing social distancing. I've also seen new records set for condos in the last week about prices, and I've also heard about very busy open houses last weekend. So that's kind of weird. Like, I'm not going to judge those who are working and those who are buying, but my concern right now is there's a lot of people on like social media preaching what Warren Buffett's saying about, when other people are fearful, be greedy, and be greedy when others are fearful. Look, I get it. That makes sense, but there are potential consequences because we're in a whole new territory right now. This is why I don't think it's wise to make a move if you're buying, because this could get much better. But of course, no one's got a crystal ball, okay? So I don't know. So please be careful if that you're kind of considering making a move, and make sure you make the right one. So what I'm recommending, and this is where my stance is right now, like from a positioning side, I'm in a camp that I'd rather not make a move in this situation, and I'd rather buy kind of on the upswing back up, because I'm not trying to time the market anyway, and I've never preached that because it could potentially get much worse. Remember, nobody has a crystal ball. At least that's what I know of anyways. Recently, since the announcement of the pandemic, I've had a lot of calls from clients kind of worrying about what the situation is. And this is what I've been telling everyone. Don't panic, sell. And don't sell because it's why we bought properties that pay for themselves. It's to survive situations like this. You aren't losing money in the market if you aren't selling at a loss. So this is why having a property that pays for itself allows you to kind of ride kind of these ups and downs of the market that's going on right now. And now, of course, if you are going to sell, you can assume that there could be a lot of inventory. Maybe there's still a lot of buyers. It's hard to say depending on what kind of property you have. Plus, if you sell now, there's like a majority of the population that doesn't really want to leave their home to see open houses. And as much as virtual like open houses are fine, I don't think it's going to sell a property. So that kind of reduces your buyer pool, which means less competition for the buyers, which means a lower price for you, which means you're making less money. This is why I'm saying don't sell. Also, the other question you really have to ask yourself, do you want people in and out of your property right now so much? Because it's kind of like a social gathering if there's a lot of people. Now, if you're on the buy side, yes, you can potentially get a deal, or what I would say, there's less competition because, people are at home. But also, there's a lot of people who work from home right now, and maybe they have more time, so they are kind of moving about. It's hard to say because I'm seeing spectrums on the really busy side and not so busy. However, I've always kind of been a little bit more conservative with how I would navigate situations like this, because I'd rather not buy when things are still kind of uncertain and volatile. And it's better, in my opinion, to buy on the upswing when things are kind of stabilizing, just because, even if you buy a little bit higher than what the absolute bottom is, at least there is less risk for you to assume, because we don't know what the bottom is. What if you buy now and it keeps plummeting, right? You're going to kind of freak out. And that's why I said maybe hold off. Now, I'll get more into this in points 2 and 3, okay? So I think at the end of the week, this will probably give us a good sign on whether the real estate market is going to continue to operate or continue to be fairly hot or slow down, because I think the overall consensus is that the situation is getting worse, and maybe some people will dial back down, maybe some people will continue going further, and only time to tell, okay? So number 2, what I think will happen with the real estate market. This one's kind of a toughie. The real estate, as much as it is kind of like a market based on supply and demand, there I think is a overarching buyer psychology of FOMO, like fear of missing out. And the FOMO in Toronto is real, like it is real, and it's fueled by credit, okay? So what I mean by credit is the availability of mortgages. So when the banks cut interest rate, the stress test benchmark comes down, people think money is cheaper, sometimes it's cheaper to buy than it is to rent, and it kind of adds fuel to the psychology of buyers and saying that, hey, look, it's a good time to buy. And that's one of the reasons why they dropped the interest rate, right? To stimulate the economy. Plus, in times like this, the government is kind of keeping liquidity and credit going so that the banks can prevent an economic disaster that could potentially happen. But like I was saying earlier, I do think a recession is likely to happen, okay? So right now, it's kind of a battle of who thinks it's a good time to buy and those who are fearful. It's just a balancing situation depending on which perspective you're looking at, right? So in situations like this, where there's a divide, there's always opportunity to be made for people, but at the same time, there's always opportunity for people to lose money as well. Again, it's back to where you divide, right? You kind of see it. There's a merit on both sides, bullish, bearish, bearish, bullish. So in the last 2 weeks, the Bank of Canada dropped their rates from 1.75% to 0.75%. And now they have another 75 basis points to go before we hit zero. So there's a little more ammunition to kind of drop interest rates. So yes, rates are going down and potentially coming in a few weeks, it may go down again, but there is a little bit of pushback from the major banks to actually drop the variable rate. Now, they dropped a little bit of it, but they didn't really give the full 75 basis points into the mortgage, okay? But as of right now, I've seen some people look at mortgage rates as low as 2.5% variable, 5 years. The question now is whether the banks will continue dropping mortgage rates if there are rate cuts from the Bank of Canada. That's maybe likely to happen. We shall wait and see, because that's going to be like the tinder that's going to be added to the fuel that could be fueling the fire of real estate market. But at the same time, the fear mongering that's in the news is also what's adding tinder to stopping the real estate market right now. So you kind of get it? Again, balance of the both sides. That's kind of the vibe right now. Now, where you stand is a matter of your call, okay? Now, the government is cutting rates and providing a financial stimulus package of $87 billion, give or take, I was saying in the start of the video, and it's to stimulate the economy, okay? Now, this is important because when travel, restaurants, hotels, social gatherings, they all kind of slow down, the circulation of money also slows down, okay? This is what we call the velocity of money, how quickly money is moving around. And when it doesn't move very fast, the economy doesn't grow. And when the economy doesn't grow, businesses can't thrive. And then we worry that they can't pay their employees, which means less pockets into the Canadian citizen, okay? So the federal government is slashing rates and injecting billions of dollars, again, with a B, into the economy, and to allow banks to keep lending to people in hope to prevent a major recession from happening. Now, when there's a major and a technical recession, okay? A technical recession is basically 2 quarters where GDP decreases, and I think what's going to happen, they'll probably announce them at the end of Q2. They're basically trying to increase the velocity with this injection of money right now. So how and what happens with so much money going to the economy? It could probably cause inflation at the end of it. I don't know, that's just my thoughts. Now, this means that at the end of the pandemic, the cost of real estate could potentially go up because there's more investors that see money as cheaper and they'll be more confident to buy again, and interest rates are probably still low. Just keep that in mind, okay? So the smart money may put more of it into assets that pay for themselves, such as real estate. So this is why I've been saying that I'm a little bit concerned right now, but I'm a little bit more bullish in the coming months when this all kind of pans out. Because if the pandemic is not the black swan event that ruins us all, I think we could probably recover. So keep that in mind, okay? Of course, we don't know yet, and that's kind of why I said I'd rather buy on the upswing when things are getting better than right now. Just my food for thought, okay? And why I've told a lot of my investment clients to hold off on the time being, whether you're buying or selling. Now, if you're looking to buy a home personally, this could kind of be a good time and an opportunity for you as long as you're financially capable, which leads me to point number 3, the economic impact of COVID-19. So I am concerned for my health and my family's health, and I'm also worried about the effects that it's going to have on the economy with this virus. But there's one silver lining that I know that could help with all this fear mongering and panic, and that is my family in China went through this 2 months ago. China has officially flattened the curve, and they're now allowed to leave their homes after 47 days of isolation, okay? So this also includes the province of Hubei, where the origination of COVID-19 somewhat started, speculation, whatever, I'll leave it at that, I don't want to get political. But the province is resuming normal activities now. So I'm using the 47 days or 60 to 100 days, depending on how you read between the lines on the economic stimulus package, of expected that we should be staying home and the economy is put on a pause. So why this is important is when I was talking about number 2, the velocity of money up to this point, if it slows down, there's going to be a lot of sectors of the market that are going to be affected. The most important things that drive our economy in situations like this are people's income, my belief is, okay? So here's my take on why I don't think we're going to a deep, deep recession, okay? But let me preface this first, okay? We are likely to go into a recession because technically, like I was saying earlier, a recession will have 2 quarters of GDP decline. So we're definitely going to decline in Q1. We're coming to the end of it, and I don't think we have any growth. And then we're definitely going to get a Q2 because I don't think we're going to have enough time to pick up, okay? Now, I do think after the 47 to like 100 days that we're estimating that we will rebound. So yes, do be prepared to hear that there is some kind of recession that's coming in the next few months. But why I'm not too concerned right now is I haven't heard of the private sector letting go of people just yet, okay? So as of right now, people are still working and they're working from home, which means they're getting paid, which means they can still pay rent and mortgage and for food now. Hopefully, the money that's coming from the financial stimulus package will also help people who are not being paid right now if they're working the hourly or like shift work. Plus, there's the 6-month mortgage deferral that's happening with the major banks. Now, as a real estate investor, this is why I've always liked downtown Toronto condos, because in situations like this, our tenants tend to be the white collar workers and they're probably still being paid for working at home right now, okay? So there is good chance that we may survive this with a couple of battle scars in the future to reflect upon, because again, this is kind of a weird space we're in. So there is light at the end of the tunnel, but don't be hoarding toilet paper because I don't think it's going to be helping too much. I don't understand it still. Now, I hope this was helpful to you and for you to remember this is just my opinion of the situation that's happening right now. And if you want to discuss a plan or strategy for what your real estate situation is personally, you can reach out to me. I'll still be working from home remotely, and I did just invest it in a better webcam. So if you want to Skype, sure, we can do it. Until next time, stay safe, wash your hands, please be kind to each other, help each other, and remember, your move, your future. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.